To give us more analysis regarding the latest Brexit debacle, Victoria Scholar joins me from London. She's a market analyst at IG Group. Victoria, thank you for your time. What are the chances that opposition MPs will be successful today in passing that bill to delay Brexit? And what impact is that uncertainty having on markets?
Well, it's interesting because Parliament is reconvening today after the summer recess, and no doubt there'll be plenty of conflict within the halls of Westminster from the get-go. As you say, there's this vote this evening that's been prompted by rebel MPs on both sides of the political spectrum, both left and right, trying to get through legislation, something that would mean that we would not have a no deal, avoid us from that crashing out scenario on the 31st of October. Now, that would be if Mr Johnson can't get a deal before the 19th of October, then Brexit will be pushed out until the end of January. Now, it looks as though this legislation could pass this evening, and that would be pretty bad for Mr Johnson and his government, and that's why he's threatened to have a snap election. Of course, he would need two-thirds majority within the House of Commons out of those 650 MPs under the Fixed Term Parliament Act in order to get that election through. It really highlights the uncertainty politically that we've been seeing in the UK ever since the referendum, because it would be the third general election within just 4 years. And if Mr Johnson were to lose, he'd become the shortest-serving Prime Minister in our history.
Regarding the slump in the pound, what are the chances that it could fall even further?
Well, we're already below that key 120 handle against the US dollar. As you mentioned, a three-year low, hitting this level, falling below 120 for the first time since January 2017. And a lot of analysts out there, currency analysts, speculating that the currency could fall even further. The currency doesn't like uncertainty, and that is what we have right now. So essentially, some analysts pointed to even as low as 110. But of course, we'll have to wait and see. The increased chances of a no deal means weakness for the pound. But what's interesting as well is to look at the FTSE 100, because normally there's this inverse correlation between the pound and the equity market, because there are a lot of international corporates on the FTSE 100 that benefit from a weaker sterling. But today we're seeing a move lower within the equity market and the currency market as well, which basically implies that there's real nervousness from the international investor community to get into UK assets right now.
Victoria Scholar from London, thank you.